Good morning, Quasar Markets Live. TGIF. Thank God it's Friday, everybody. Hope everyone's having a fantastic start to your day. Biggest news so far this morning is payroll numbers. They came in pretty steady at about 4%. I do have a little bit more information here, so let me grab that. Did make a first move to the upside after it, but quite honestly has sold off since then. Excuse me. So in February of 2025, U.S. economy added 151,000 non-farm payroll jobs, falling short of the anticipated 170K. Some of the key highlights: unemployment rate remained steady at 4%. Like I mentioned, government layoffs, we started to see some bigger, significant federal job cuts. 62,242 layoffs across 17 agencies. Wage growth increased, but slightly at about 0.3%, putting it on track for an annual rise of 4.2. And how did the market react to that? So we'll just sort of look at QQQ as our indicator here. And if we go to the 1-minute chart, what we see is there was a first move to the downside, followed by a nice little spike up. We'll mention, at that point of that spike, I did mention in my Slack channel there, usually we've seen a reversal of these first moves, and it did play out. And we're now actually lower than we were before that economic news as it sort of gets highlighted. I also don't think it helps. I did notice CNBC, they were all yelling and screaming at each other after the news, arguing whether it's the current administration's fault, the last administration's fault, who's right, who's wrong. I don't think finger pointing is the thing to do. We want to take a look and say, hey, what does this actually mean? And I don't think this really surprised anybody. The labor reports we got earlier in the week, the economic data we got earlier in the week are all pointing to a downward bias, right? The word recession needs to start coming back out maybe. I'm not here to beat the drum that the world is ending, but, this tariff talk is just, really one of the big problems right now as I put across the screen. And what I mean there is the fact that we just go back and forth, and it's causing this market volatility. And most of it based upon this U.S. trade policy. It's got equity markets across the globe sort of moving in weird situations. And, if we look, the stocks overnight down about 81 basis points. But in general, on all of this tariff talk, Europe has been a net winner to their stock market tremendously. If we go over to China, they too have actually been a winner since that last 3 days, since this sort of tariff talk came out or sort of hit the first deadlines. And as China has come back and said in no uncertain terms that we're willing and ready to fight this. So we do see that. And then the Nikkei is sort of in shambles here, down at some of the lows we've seen in, since September of last year. But, lows of 2025 retraced all of the gains again, similar to the U.S. election, right? Since the U.S. election, if we look at the QQQs, we see, even the spot we were at in July of last year we're below that spot right now. And then if you come over here to where the election was, we gave up all those gains. All the spots we gapped up there on the election have fully come back. So, any way you want to term it, whoever fault it is, doesn't really matter. Bottom line is the markets are very uneasy. Again, I can't stress enough that if I have one of the winners today, I was neutral, so I don't have anything going on. But if I was in Broadcom, one of the big winners here, AVGO, on their earnings, you can see it was up 13% at a high this morning of about 214.21, and right back down around 196. So it's given back almost a half measured move to the downside here after that move up. So, we'll talk more about Walgreens, but that's a specific situation here when it comes to Walgreens. Keep in mind, They are going private equity buying them. They'll be coming off the market. So not one you really want to start trading around in. The sell price has been figured out, and we'll talk more about that. Excuse me, I apologize. A little bit of cold or something here today, so a little bit under the weather here. Feel fine. Just my voice is a little shot here. So overseas in general, markets are down. Tick so far this morning have been positive before the news sort of came out on the jobs payroll. Before that, we had been fairly positive. Now we've been fairly negative since. Like I said, SPY set to open down slightly, about 8 basis points. Qs to move up about 8 basis points. Bitcoin, we definitely have to talk about that, right? Pretty much, if you've been listening to me here over the last few weeks, it's been what I've been saying since it was announced. I didn't see the U.S. going out and buying a large amount of Bitcoin to create a strategic reserve. I thought that they would just take the Bitcoin and crypto we already have seized, whether it be from Silk Road, Bitfinex, or some of these other hacks that we have a significant holding of, in the upward vicinity of 200,000 Bitcoin, for instance. So that is what's going to happen. Trump did sign an executive order. A couple of things there. Again, I don't know that we needed an executive order to get to the Bitcoin strategic reserve, that it shouldn't have gone the full length through the Congress. But, Congress hasn't done anything in the last 4 to 6 years to move forward on digital assets. So maybe this gets it going. Market pretty much, it was pretty volatile over the last 48 hours, but pretty much unmoved in the middle of, this range in between the 85 and 95 that we've been trading at since, the 24th of February or so. So not a whole bunch there. Doesn't surprise me. I have said the news I do think that maybe we see today, and I don't think it spikes the market much at all anyways, will be in regards to capital gains. And again, I don't know that that's going to be anything more than an executive order, not something that goes into bill/law in the right way. So but Bitcoin right around 90,000, holding up pretty well in general there. My takeaways for that on Bitcoin, though, is what it does do is there's a few things, right? It means that the chance of Bitcoin being outlawed in the U.S. just officially sort of went to zero, right? There's always been, while that threat has decreased and decreased and decreased over the years, we saw how the last administration's negative approach to it, hurt a lot of innovation and pushed a lot of people offshore. Now those people will come back onshore. So hopefully tax dollars that come from trading revenues and things like that, even if they do make the capital gains tax on crypto, remove it, what it will do is even more so that would get things like Robinhood and Coinbase, right? That would be a benefit to companies like that. I will mention that both those companies are their CEOs will be part of today's crypto summit in DC. Vlad was on CNBC already this morning. They are down about almost 9% over the last few days. But again, news there tends to spike them. So keep an eye on Hood. Coin, again, another one that would be a big beneficiary, right? If that removal comes, because they, you would think that you would see more crypto trading as people who are averse to capital gains taxes on their, day trading of stocks might very well switch to day trading Bitcoin and crypto again. So, Coinbase, Robinhood, those are some of the ones that you could play to that effect there. When it comes to rates, they had been moving more to the downside here today. Bond market, again, seeing a pretty significant sell-off, especially in Eurozone bonds. That was triggered by Germany's substantial spending plans. So we'll see what happens there. But as you can see, U.S. 10-year now back at 4.2, had been as low as 4.12 earlier last week. So maybe we return back to those levels. 30-year approaching back to that 4.5 level. and hopefully even maybe get down towards that 4.45 level. DXY was continuing. Looks like it's moving up a little bit now. It had been down almost at the support zone that I triggered in here at 103.409. Didn't quite make that, but the area that we had hit resistance in mid-August and formed a little bit of support here in mid-October, I sort of, mapped out as the area that I would want to see, as a spot maybe to go long the dollar here. 103.40 could be a spot there. Euro continuing to move to the upside, 108.56. Did not get all the way to that 109.322 that we were looking at again, maybe as a blow off top for the euro, but hasn't made it all the way there yet. And USD Japan, the yen, it continues to slide. It slid through its support at 148.821 here. I sort of looked at a zone here of liquidity that I see in between 145.87, excuse me, and 142 as a liquidity zone we could retest here if we see more slide by the yen. I think I did have a little headline there, and I did, is that, Nikkei 225 has tumbled 2% to a 6-month low, like I mentioned. And this would be the Nikkei here. So we will keep an eye on that. We are about 15 minutes, a little more than 15, 18 minutes away from the open. We're seeing the tick continue to slide to the downside. Advanced decline moving down also. That was up around 1,200, 1,300 just about a half hour ago. You can see here pretty steep move to the downside. In fact, it was above 1,800 here earlier this morning. So it does look like going into the cash market here a little bit weak again. Let's start to look through some of the individual stocks that have had either good or bad movement here. Broadcom is one. Like I said earlier, up about 8.8% now. And I do have some news from their earnings report here for everyone. So they did hit an adjusted EPS of $1.60. Again, this is Broadcom AVGO, the second largest chip manufacturer by market cap. They are up after strong earnings. $1.60 EPS. They were expected to come in at $1.51. Top line revenue, not quite as big a beat, pretty close to the 14.62 billion consensus that came in at a little under 15 billion. Again, talked about AI. Their AI related revenue growth surged 77% year over year to 4.1 billion. So again, they are showing the proof is in the pudding, so to speak. For a future outlook, their Q2 revenue is expected to be just again slight of 15 billion at 14.9 billion, above former analyst projections of 14.7. And their CEO, Hock Tan, highlighted strong AI investment from key customers. So again, my key takeaway is that strong AI-driven growth and optimistic guidance does get the market moving in the right direction, or does get stocks moving in the right direction. And we do see that here by AVGO as a little bit of a sympathy play here. We see NVIDIA, which is also sort of just bouncing back. Yeah, Mr. Flanagan, we'll talk more today for sure about all these employment numbers. I have a whole bunch of questions for you when it comes to trade policy, what the euro is doing, bond market sell-offs, Germany. So absolutely, my friend, we will have you in to break all that down with me. Like I said, we're seeing, people react to economic data, and then the market sort of brings everybody back into common sense. But we need to figure some stuff out here, because this just tariff uncertainty and just uncertainty in general has the market spooked. We can't keep anything going, for any type of extended move to the upside. The only thing we've seen is consistent slide day after day, sort of be the bias. We're not crashing, but we are just slowly melting down on a, daily basis on things here like Nvidia, and even to a little bit of a more macro level, the cues here. So, that's what it is. Again, I'm a big believer in the 200-day MA as a guide for bearish and bullish, as a bigger macro look. It is, from 200,000 feet. If you want to take a look at any sort of commodity, anything, and the cues have dropped below it now. It was holding support. I think we need to see that needle turn and get back above it. What I will point out is that so many people do look at this is we might see the indication, and RSI showing us a little bit where it's bottoming out and finding support, that maybe it is time to start to dip a toe on the other side of the boat, so to speak. Everybody seems to be fishing to the downside based on these charts. At some point that will turn. But again, where I'm going to be on that is I'm going to let it see it turn. I'm going to let it see it, I'll give up a few shekels and not be the first one to put my my fishing rod on the other side here. That's sort of my philosophy on the markets right now. Same way on crypto, until I see actual recovery that is more than just a news-based event, but actual showed by volume moving in the right direction on a regular basis, that is an ETF pushed, then I'll dip my toes back in a bigger way. But that's me. I'm just being cautious here. VIX is still up around 24.89. So staying in these elevated levels, but again, as I warned, you could see a spike up into 30 with no problem on, news here. Most of the news has been we're kicking things down the road a little bit when it comes to tariffs. So that is a positive, in my opinion. Hopefully we can get some common sense there. People get to the table and we can make some movement there. So that's what we're looking at. Other stocks I am watching here this morning. We did talk about broadband, Nvidia. On the downside, we've seen a downside move by Hewlett Packard. They did have an earnings miss, and they have announced cost-cutting plans. So again, if you want to see the opposite in the tech sector, so while one is chips and one builds computers, basically computer processing hardware, very similar type things. Broadcom pointed to the growth of their revenue, their adoption of AI, and how their early adoption in there is doing it. Hewlett Packard, on the other hand, came in with an adjusted EPS here of 28 to 34 cents, well below expectations of 50 cents. And their revenue was a slight miss there. They came in between 7.2 to 7.6 billion, wanted to be 7.92. And bigger things that have it spooked is their plan is to reduce the workforce by 5%, about 2,500 jobs. So again, we do have to keep that in mind. We're seeing that start to hit Wall Street a little bit more on public companies than we had been. So, the labor tightening continuing to go there. I was hoping to hear, and I didn't see anything, Steve Leishman had mentioned that he was going to do a deeper dive into what's happening with what we call the Beltway bandits. While it's important to track federal layoffs and the reduction in the workforce on the federal sector, it is just as important, and maybe even a little bit more important, because it's harder to gauge what's happening with companies like Cohn-Resnick, Accenture, Palantir, all these companies that survive based upon federal spending. So, we saw Treasury Secretary Bessent come out, and he made it clear that, businesses are going to need to survive without the government supporting them, was the way he worded that. I think that, again, not something I necessarily have an issue with, but it doesn't do a lot to keep markets, moving in a positive direction on a shorter term basis. So just something to keep in mind. Again, a lot of the news, well, I think maybe that I agree with the reasoning behind it. The quickness of these announcements and sort of the way that they're framed is spooking the market. So Hewlett Packard CEO Antonio Neri called trade policy shifts a fluid, complicated situation. So again, they are definitely down, almost 20% over the last 2 days. I didn't really take a look, put my analyst hat on, and see from a technical analysis where I'd be looking maybe to pick them up. I mean, I think I would start to say that my real strong inclination would be more in this area where we traded back in the middle of 2023. So down somewhere in that 16, 18 area on any kind of continued slide. Otherwise, again, what do I want to see? I want to see it, I might not make this. There's a good movement here between where we're at now and the 200-day MA. So you could start to put in some other levels, like you can see here, where it's had some gaps up and down from this area here, where it's close to now could give you a spot. My problem is that I don't see a great, well, it's not bad. I mean, the thing is right now, you just want to be really tight with risk reward. So if I was framing a trade here thinking that Hewlett Packard is oversold based upon, it was already down 5% and now just hit another 15. So I start to put an analyst hat on and say, how would I trade this in the market we're in right now? For me, it might be something for looking, at an acquisition on any kind of bounce back on the daily RSI with a pretty tight stop loss, down around the 1726, which was where we bounced up in March and April of last year, because a drop below that, I think, gives you, significant downside. So, those are the things how you would have to plan a trade, but it's tough here on a lot of these. Marvell bouncing up a little bit here, recovering, but yesterday down 20% again. You can see here it is trading in the liquidity zone that I pointed out yesterday. So Marvell is in the liquidity zone. Here I was looking at in between 63 and 73. So, again, what would I be looking at? I'd want to see it play out through this liquidity zone and break back out to it. So I would want to see a break to the upside above 74.21 on a play like Marvell. But at that point, that's where I would maybe look for an upward play if we can get something towards that 85.49. But again, I want to see a break of 75. I'll give up between 71 and 75 to play it from 75 to 85. I'm going to be much more, reserved in my way that I'm going to do it. WBA, I don't want to say your name wrong there, Shinalakoa. I apologize. I don't want to say your name wrong. WBA is Walgreens. They're going private. Tough to play this because they've already made the announcement. I do have that here for you. Sycamore is going to pay $1.45 a share. So that's where you're going to be at. So eventually when this does close, it's going to close at $11.45. So could you play it for the nickel here right now? You absolutely could, but keep in mind spreads and everything there. Liquidity is going to dry up on it. But WBA, which is Walgreens, is going private and bought out by Sycamore. Shareholders to receive up to $3 extra per share from future sale of Village MD stakes. So there is some upside play there, but you're being, for me, that one gets a little more confusing. I would probably just stay away from it. I wouldn't be looking to short it either. I don't think it's going to move very much because it's locked in and agreed to. Now, it still has to go to the shareholders, but it is in a pretty good situation there. I did have a banner on that. I should put that up as we're talking about it. There you go. So they are moving up there on that news. Gap, believe it or not, the Gap up nicely here, 13.6%. I do have news on their earnings. They did have really good, strong earnings here. If we pull it up on TradingView, you can see they had a 43% win. I just wanted to check that my notes were right there. 43% win on their EPS here. trading up at 22.05 now. So nice gap up on the gap, pun intended. They announced that their fiscal year sales forecast is going to be probably closer to 2%, where the street was expecting 1.7. So a little bit better there. The other thing that they did talk about was their operating income forecast is looking at a growth of about 8 to 10% year over year, from the 1.1 billion in 2024. So they're looking for a nice little increase there, and their improved margins and solid consumer demand boosted their turnaround story there. So the gap looking pretty good. And like I said, nice little gap to the upside here. What does it mean going private? It's no longer going to be a publicly traded company. So you're no longer going to be able to trade it. At some time in the near future, the ticker is going to be removed from the stock market, and everyone that owns it will get a check from their broker. So usually people sell it before that. So that's why, I wouldn't be trading future contracts on it, because they're just going to disappear. You won't lose money. The broker does give you the worth at the end, but it's not one that I've ever played through, because it's not very often. You don't see publicly traded companies that are going to go back into private equity. But in this case, Sycamore, which is a private equity company, is buying all of the shares, 100% of them. Everybody who holds the stock will get paid out. And at that point, then there is no more trading of it on a public stock. It is a private company again, just like the little grocery store down the street. Let me try to find that information for you. When is the private? Give me 1 second here. If it gives me a date here on my report. That is a great question, so I will look that up for you here. So it's not expected to close till the fourth quarter of this year, because it's got to go through regulatory approval. Like I said, terms of the agreement, $11.45 per share in cash to WBA shareholders, representing what was a premium. Not really a premium now, because it's trading right around that amount. In fact, when it closed yesterday, it was trading above that amount. Upon completion of the transaction, shareholders will receive the cash payment for each share they hold. Specific details regarding the distribution process will be provided by Walgreens as the closing date approaches. Shareholders are advised to monitor official communications from WBA, again from Walgreens, on the comprehensive payment procedure. So anytime we can help out, we'd like to there. If you have questions like that, please feel free to ask us. We're always willing to try to get you the answers as quickly as we can. When we have our man BigBeat here, he's usually able to give those to me in a matter of seconds. Since he knows that information, I got to look it up just to make sure I don't want to mislead anyone, and I don't have the 35 years that our main man does there. Costco, one of my favorite companies out there, down about 3.16% here on their earnings. I'm going to pull up that information on theirs. Okay, so Costco, their revenue rose to $63.72 billion. That did surpass analyst expectations of $63.11 billion. Same-store sales increased by 6.8%, which I thought was good. What I thought was even better is their e-commerce sales jumped 20.9%. So Costco, not one that I often think about, quite frankly, when it comes to looking at, e-commerce part of it. They are moving in that direction. So I was happy to see that. Their GAAP earnings were $4.02 a share, which was slightly below the FactSet expectations there, but still pretty good. And their CFO, Gary Millerchip, noted that consumers are becoming more selective in their spending due to inflation and potential tariffs. I will point out that that is a big shift from their last earnings. They did point out during their last earnings that they they were seeing a move into more spending in their stores, both from the high end and the low end. They had pointed out last time, they had mentioned that things like Wagyu beef and expensive caviar and champagnes were moving up in Walgreens and Costco. And then they mentioned that they had seen the consumer in the low end, because they were able to be so competitive with their prices, were still coming in. So that's a little bit of change there. The company does plan to open 28 new stores this year. 3 of those are relocations, so pretty good on that. And again, they said that they were showing strong demand in electronics and their pharmacy segment. So again, I don't use their pharmacy. I'm going to have to look into that. I am a Costco member, so I want to see a little bit more about that, learn a little bit more about that, see if they are a player there. And then, as I talked about, their higher end meat products saw solid demand. But their lower cost cuts like ground beef and poultry grew even faster. So that's the shift that I saw in their earnings from over the holiday season. And I think that's also a little bit of holiday seasonality, though, I would point out. I think we all spend a little bit more entertaining and feeding our families during the holiday season than we do the rest of the year. So I do think that's a little bit of seasonality, excuse me. Another thing I did want to take away, though, is their CEO, Ron Vitris, highlighted the unpredictable nature of tariffs. So that's now the second company that we heard talk about this. And he said, when it rains on everyone, and emphasized Costco's readiness to adapt sourcing strategies to minimize member impact. But I do think, again, that's a takeaway. He made it clear that, nobody's going to be immune. We are open here. I apologize. I started chatting away there. The tick is down 122, and I will take a look at BABA here in a few seconds. No problem on that for you. Tick negative 255. First moves are to the downside in general. We see the SPY is down 16 basis points, moving even further down 18 basis points. QQQ just hit down 10 basis points, moving to the downside. Again, one of the things I look at very closely on open is VWAP, which is the purple line in here, value weighted average price. Gives me a little bit of an indication on what's going on in the market. I will mention that yesterday it played out almost perfectly throughout the day. It broke through to the north side earlier in the day. This was yesterday. As we were watching it, it started off negative. If you played it off the open, it played down pretty nicely. Once your trailing stop got ended and you got a re-entry, once it broke through and retested VWAP, as I mentioned, it made a nice move to the upside, getting as high as 498.59. Again, your trailing stop would have ended there. Nice trade. It came right through VWAP, retested it, and if you played it, you had a win through the end of the day, all the way through the close. So again, VWAP, one of those momentum directional that I like to use here to see what's going on. It is trying to approach VWAP for the first time here on the morning. We'll see if it can get through it. QQQ has gone slightly positive, tick still negative. We see SPY, same thing. It's trying to make a move into VWAP here. And again, the reason I'll point out that this is so important to watch is this is what most zero DTE traders, especially option traders, are looking at, or at least have on their screen, is VWAP. So that's why it becomes so important. The same way as I was talking earlier about 200-day MA and how that is important for, thematic traders like myself that are looking more at a theme, a longer term theme there. Although I trade both ways, obviously, since I talk about them. But we are seeing a little bit move up here, trying to get through VWAP. Again, I'm trying to see if we can get through that area around 573.15. If we can get through there, that to me would give me a little bit more move that the cash markets are going to move us to the upside. Qs are moving up nicely, though, up 17 basis point. Just broke VWAP here. So again, what do I like to see? I want to see a first move through it, see it consolidate up in here and around that 489.50. Retest the VWAP, and on the bounce is where my entries come. So that's what I'd be looking at here. On the 1 minute is retest and VWAP as we speak. So I want to see it form a little bit of a move above that. We do see the tick is fairly neutral here at 66. Haven't taken a look. Bitcoin holding up right in that 89,270 area. Gold back up today, 29.18. Let's take a look at the currencies. What's going on there this morning? DXY 103.56. So we do see King Dollar still sliding a little bit to the downside today. You asked me to take a look at BABA there. Let me give you a quick look at that. BABA up about 1.49. I did have most of the Chinese names were up earlier today when I was watching. And you can see some of them here. Billy, BILI up 3.1%. Li Auto up 3.19. HSAI up 3.41. So that was an early theme. I was noticing Chinese names were moving to the upside here. I will point out that Alibaba I've been watching for a while here. It is trying to complete, and looks like it might have actually completed on the day chart, this 3 measured move to the upside here. Not quite. So I still am looking at, lessening any load at any move to 146 or so here. On BABA, I'd be more apt to short it. I'd want to see a strong move through that 146, which of course is its all-time high. 145.30 actually is that area here. But still looking strong. Chinese names in general, like I said, Billy moving to the upside here. The autonomous driving company. Again, nicely moving towards 52 weeks highs. We see that on a lot of these. Li Auto, while not moving all the way up towards its all-time high. Again, nice little upward movement here. HSAI, I don't watch as much, so I'm not sure that they are in an upward movement, but hence I still moving to the upside slightly here. Nice consolidation here, quite frankly. If I can see a move above 1740, I like it. Let's take a look at what's moving the most here this morning so far. Give me 1 second to change my screener from my pre and post to our market pumpers. Again, starting on the downsides, things getting hit the hardest here so far. Hewlett Packard, we talked about poor earnings, and from there we saw some layoffs announced, has them down about 16%. Cooper Companies, let's take a look here. They were not moving in the pre-market, so if I had to guess here, they have some analyst news, it looks like. But those analyst news, oh, here it goes. They just had earnings. So Cooper Companies delivered their fiscal year 2025 earnings. Came in at an EPS of 92 cents, which is an improvement of 8.2% from a year ago. So pretty good earnings overall. Trying to see if there's any takeaways here as to why they're moving down. I mean, they derive their income from the Americas, Europe, Middle East, and Africa, and Asia. So from all of them, not really a reason here. Not really seeing any reason for a sell-off so far. I'd have to read more into that, but they are the second most down here as we look this morning. AST down. We know that Lunar was down earlier. AST down also. This has to do with a sort of, I don't want to use the word failed, but issues with Lunar. Here we go. Intuitive Machines. They were down 36% earlier based upon, issues with their lunar landing challenge. So I had them, I thought, on my chart here. Well, we'll just pull them up. Lunar. So they are actually bouncing back pretty nicely here. So people are buying the dip there. They're still down 24%, but you can see they hit lows of 706 this morning. And you can see here, this one, they had real nice, they consolidated all the way down to a spot where you had really solid support here in that zone. So nice little trade there, moving up now. If I'm looking on the upside, I'd start to get nervous right about where we're at. 883 would be the spot that I'd start to get nervous at here, but maybe we see a move further to the upside here on a bounce back from them. Let's look at the things. Let's get to the positives. Let's look at what's moving to the upside here. As I said, Walgreens now trading at 11.42. So again, keep in mind, Walgreens has a fixed price there. Broadcom up 6.08, so giving back some of its gains. Goodyear up. I did notice that in the pre-market, so they were up. As I said, some of the Chinese names moving up. And then we get into where there's just volatility, and I don't know that I would play it one way or the other outside of a short-term scalp. We see AppLovin moving to the upside. We know it had been destroyed last week. This thing's dropped all the way down from 520 all the way down to 260 before getting a little bit of love here. But AppLovin has definitely been in the downswings here. Nice play. If you got those 20 call contracts in June there, depending on your strike and your premium, could pay out really well for you there. So nice trade there. Very nice trade. Let's take a look here. Tick is nicely up. We are continuing to move up, and you can see we broke through that VWAP nicely here and moving to the upside like we talked about on QQQ here. We actually broke nicely through the 1 standard deviation. That's what that green line is. So if we can break through and hold above that 490.26, we remain bullish. It'd be a second level of entry into this trade, quite frankly, a move above. And there you go. We got some momentum going here, folks. So a little bit of momentum here early. I will mention you got about 8 more minutes before we sort of have the blow off top from, where the algo sort of stopped playing after that first 20 minutes. It seems to be a time that we take sort of a deep breath here in the markets and move on. So struggling to break through that 1 standard deviation. SPY looks like it's probably around the same spot here if I pull it up. SPY not as quite as much momentum, but what do I like here, right? Failed to get through VWAP first attempt, broke through it second attempt. It's coming back down to test it here. If we can get a test of the VWAP here and a move to the upside, I'd love it for a move to the upside here. So we're seeing that Bitcoin bouncing back up, trying to get back above 90 here. Again, Bitcoin's been playing above right at that 1 standard deviation. Has been more the area that it's been for you scalpers out there. That's been the area to watch, and it's moving up now. It's going to make a run on 90 here. So seeing a nice little move up. Let's take a look at the things I was watching pre-market. Like I said, Broadcom, on the other hand, has been retracing a little bit here, giving back its momentum. And you can see once it broke below VWAP here, it has continued to fall to the downside. Is trying to make a move back here. NRG was another one that was moving up earlier this morning. Let's see how that's doing. Holding up, not as much volume there to really look at the minute chart. But it's got a nice little zone of consolidation here. NRG looks pretty good on an hourly chart here too. You can see. Starting to consolidate this morning in this zone here. Could finally be starting to see a little bit of an upward move by NRG. Energy here. So we're seeing that with a little bit of a move. You want to know about Marvell? Marvell is one of my favorites. Talked about a little bit earlier here. It was down. I actually have that one charted out, so we'll start there for you. Marvell is right in the middle of a liquidity zone that I've been watching here. That liquidity zone was set up, as you can see, throughout, the areas here going from almost January of last year all the way through September. It traded in a range in general between 65 and 75. We are in that range right now. So what I would want to see there is a move back above that 75 area. On that move, I think you got a nice area to watch it run up to 85.49. Right now, I'd more be playing it for a slide back down towards that 64 level. PEP, I'm not that familiar with that one, but always willing to take a look. Oh, PepsiCo, that had been moving up, I know, tremendously after their earnings. You know, PepsiCo is a little bit tougher. This is a little bit, it's an interesting chart to take a look at. So I like this one a lot. If I can just get there we go. So what we see here is it played out into a nice little W formation, right? Came down, retested the spot where it came down from, double bottom. So same bottom that we had seen here, moved up, and then we can see we're in a consolidation zone. So the question here is, do we get our first move back to an upward bias towards the 200-day MA? That would be the area that I would definitely start to worry about, because you can see that 200-day MA also coincides where this second slide down really happened. You know, it made a move down to the area we're in here, you know, back in November of 2024, moved up nicely to that 162, you know, area where it had been, again, where it had fallen down in November, unable to broach that. So I would be selling off into that area. What call contract do you have there on that? But that's what I'd be looking. You're going to see sell pressure here on any move up towards the 162.63 is what I'd say here. You know, you can see at 160, that round number, which is the area that it sort of consolidated, or top consolidation on the way down was. That was where the downward pressure really hit it back here on December 11th. You can see that wick right here was right about that 160 level. That's where we got a sell off here. So 160 is definitely your first level of resistance to watch here. And then you've got move up to that 162.63. But I think that's going to give you your second level of resistance there. And if you're in a 0 DTE, looking extremely great there. Although I think you said June, didn't you? Oh, no, it was the other one. Sorry. But yeah, definitely you got some good trades there. Good trades there. Let's see what's moving here again so far. I do want to take a look. I didn't break down the sectors for you guys. So what's looking nice so far is when we look at the select spider funds, the 11 breakdowns on the things. Yeah, so you got a good spot there. You know, I obviously wouldn't hold those all the way into expiration. I'd be looking as it enters that 162.5 area, especially with that much time. You know, you want to do it. Yeah, definitely. I could see that. And what I'd be looking at there is, you know, your time decay will start to pick up on the 17th of this month, right? You know how that works. So you want to make sure that you're looking at it as you get towards that date. So about 10 days from now, you still have a low theta that's involved. Your time decay is not killing you yet. Time decay will start to come in on those 170s because you're not there yet on there. So keep that in mind. You know, that is definitely what you would want to look at there. But great trade. You got some good winners. So again, Spider Selects, we're looking pretty good here. We're trying to go positive. It looks like on 10 of the 11 consumer discretionary, slightly negative, trying to move to the upside. You can see the financial sector still down about 22 basis points. Big winner today is utilities, up 1.2%. Anytime. We're always here to help. And XLE, which is the energy sector, up 2%. So those seem to be the big winners. I didn't look at steel so far today. So steel's getting a little bit of a bounce back day today. We know it got beat up pretty hard yesterday. The other ones that I was watching here, AVGO holding up pretty well. NVIDIA getting a little bit of a bounce back here. The one that's really holding up well here so far is Gap. The Gap is gapped up and holding nicely here at 14.53% on a win. See that Walgreens is giving back a little bit more. Costco here, 977. Let's start to take a look here at Costco a little bit, because that's one on a further dip I could be interested in here if I sort of put on my analyst hat. So what I would start to look at here is, you can see it's not exact here, but you got a pretty good zone of what was support back here in November, leading, you know, after the election, became resistance for a little bit, right over here. So over in this zone, it acted as support, right? Over here, It acted as resistance. Oops, I don't know why I started capitalizing it on you. Resistance. It gave us a little bit of resistance and then support, right? Right in this zone here. So I'd start to target that 960 area. And I'd even be willing to pay somewhere in the vicinity of 970. So again, I like to look for what I call liquidity zones. And I'm sort of looking here at a liquidity zone. Come on. Doesn't want to move with me in that area. So again, if I can get a move into that 970 area, I definitely am interested in an upward play maybe here on Costco. I do think it's one of the best in class. I do love it. Lunar down 24% here. Not much. I'm not a buyer there, though, yet. It did a nice job. It had its zone. I missed it. I would have liked it at that $7 area. But, you know, again, we don't want to chase. Look at the Mag 7s having a pretty good day overall, led by NVIDIA here, and then followed by Apple. NVIDIA up 2.5%, Apple up 1.55%. You see Tesla getting some breathing room here back above 265. Again, another one that's dropped below the 200-day MA and some key zones here. So let's see if it can bounce from this area. I don't trust Tesla at all right now. Netflix is the one that's interesting too. This one's down 10% from its highs, and even a little bit more. It had gotten as high as what, 10.065. Back down at 900 here. So Netflix. And again, we are seeing supports work it out so far. Costco did point out that they, you know, he was the CEO that used the word when it rains on everyone, pointed out tariffs are still going to be a problem there. They also pointed out that while they're still seeing, they had pointed out in December, the reason they really shot up after this earnings here is they had talked about a, you know, the big shift that they were seeing with an affluent consumer coming in and buying their very high-end products, and that really moved Costco's number. And what has them down today is that consumer is not as prevalent today as it was, or is not spending the same way they did it in December or in the holiday periods right now. I do think it's just a little bit of seasonality per myself. That's why I am a long-term look at it. Yeah, I don't know if it goes to 100 on Tesla, but it definitely, I've got 234 and then 213 is the next levels to look at there. So a little ways to go to get to 100, but I do have downside targets for it mapped out all the way to 213 there. So can't argue with that. Microsoft, the only one that's still trading to the downside here this morning out of the mag, and it is trading on the upper end of its trading day. So we are seeing a little bit of strength kick in here. Tick positive 588. Q's now up 75 basis points. So continuing to move nicely to the upside. And again, like we said, look at that breakthrough through the view app. If you were scalping, nice move here. You know, again and again, once it broke through the one standard deviation, right? A second good move. If you were scalping those, if you're a 0 DTE person, you just followed those two calls. You just had two very nice wins here. You know, I'd have my trailing stop in halfway between where we were and that one standard deviation personally, but that's how I would play it. I don't tell others how to make their trades, but as you can see, that worked out nicely so far. Doesn't lie too often. Same thing. SPY, even nicer move to the upside off of that when it broke through again. And right, we look at it. It played around at that one standard deviation earlier in this 924 again, just to break down what I'm looking at here. I'm not here to tell you what to trade. I'm here to try to teach you how some of the professionals trade. We struggled to get through the one standard deviation first, right? We able to finally broke through it here. tested the VWAP, came all the way back down to that 1 standard deviation. We love seeing that. Next move up, stalled slightly here before VWAP, but broke right through VWAP. Nice move up again, stalled out at where? That 1 standard deviation. And now it's been riding that standard deviation to the upside. So as long as we see an upward trending VWAP, as long as we see an upward trending standard deviations, we are seeing a little bit of a bearish divergence come in, but trend direction is that. So, you know what I mean, is we definitely do. That's how we'd be trading it here. Does look like you might get stopped out on that trailing stop here. We'd be okay. Boom, nice win. We would have got stopped out there, but it would have been a nice move up here from, you know, the breakthrough point at about 574.25. You would have got stopped out at 575.41. I'll take a 75-cent, 80-cent move on the Qs if I'm scalping options here on a 0 DTE. Again, right now, what's it doing? Challenging that 1 standard deviation. Looking kind of weak, to be honest with you, heading into it here. Let's see if we get a bounce and undercut and rally, or do we just drop? We drop through the 1 standard deviation. So now we'd be, you know, more looking to short towards VWAP here, maybe. TM, we can definitely take a look at Toyota. I don't follow them as much, but I can definitely take a look at their charts for you. So this one's a little bit more, this is definitely a little bit of a more crazy chart here. What I sort of see, this one you really got to zone out far to kind of get your zone, because the area you played at in mid-July is so far away. You're more looking at what you did here in 2023. So you can see it's basically at what was, you know, the key resistance spot back here in 2023, right? Broke through it in January of 2024. Throughout all of 2024, basically, well, first half of 2024, sorry, that was the line in the sand. It got a nice bounce here on the first attempt of it in June, but when it retested in July on earnings, it just dropped down. And then it wasn't able, it's made 3 little jumps above it, but retraced. So now you got to start looking at, you know, personally, if I'm not in it already, I got to see it break 195 to do it. You think Toyota is going to look into that? Oh, wow. I hadn't seen much news about them in space travel personally. The bigger move, you know, the bigger news out of Japan had been really based around, you know, the expected merger of Honda and Nissan that didn't happen. But this one I don't really have a good feed on. I'd still be bullish on it. You know, what you just had though is what's called the death cross here. The 50 crossed above the 200, and it was the first time that it's done that since here. So, or excuse me, the opposite. We just got the iron cross, golden cross. So you might have it. You might have a good spot. You can see the death cross came back here with a 200, went above the 50. I apologize, I said that backwards. And that led to that terrible price action. You broke above it here, you know, back on March 4th. So that's one of the bigger ones to keep an eye on. Okay, I do see him in the room. He was off vacationing in Florida, left me all here to myself on a volatile week. So, you know, I don't know if I'm still going to be talking to him later on, but we got our man, Stephen Flanagan, in the house. Mr. Flanagan, how are you doing today?
Yeah, Howard, I'm doing good. And
muted, Steve.
You hear me?
Nope, still muted.
How about now?
No. Uh-oh. Give us 1 second here while we try to figure this out with Steve. For those that don't know, Mr. Flanagan is our man when it comes to everything having to do with currencies and macroeconomic looks long-term. No, I still don't have you here, Stephen. Let me see what we got going on. I apologize. Oh, you can hear him. Ron, he can hear you, so I'm off. Steve, I'm muted here. I just wanted to mess with you since I had been out at you know, since you decided that you went on a vacation there. Now I have to check mine because my audio is not right. Okay. Can you talk again there for a second, Stephen? Why does it not want to give me you? So hold it 1 second. Oh, you gotta now you muted yourself. I am so sorry here, guys. I apologize. It might be, do you have to hit that little button at the bottom of your screen, Steve, where you see your picture? Take a look at that. I see the mic. There we go. We're back. I can hear you.
Technical issues with the
I've been alone all week. You and Steve left me all alone. So, I haven't had anybody to talk to. I've been sitting here just yelling into space. So I didn't have anyone to listen to. How are you doing, buddy?
Well, I'm doing great. And what I would like to say is, my king dollar theory. And believe it or not, I still adhere to it. We did talk about March, April as the period we need to get through. And so when I talk about currencies and how money moves first, I always try to give you support and resistance so that we can react accordingly. Howard, do you have a chart of the euro dollar that you could swing up for us here?
Absolutely.
Because, what I want to highlight is to just put the macro view in perspective to our audience here. What has happened this week that has shocked the market? Yes, equities have gone down, and there's been big reverberations in the treasury markets. But underscoring this has been one issue that has cracked the tectonic plates and set off a major earthquake. And that is Germany's newly elected center-right Christian Democrats, under the leadership of Mr. Merz, have proposed a constitutional amendment to allow for higher government borrowing. The conservatives and the social democrats have now aligned themselves to create that unified government, and they're seeking to loosen Germany's debt brake to allow higher defense spending and proposing a 500 billion euro infrastructure plan. I did not see this happening until June or July, when they absolutely cratered.
Yeah, they seem to be looking forward as opposed to our Fed that keeps on looking in rearview mirrors, right? It looks like for the first time since I've been doing this, that I can say the ECB is more forward-looking than the U.S. And it's not really the ECB. I know that. It's Germany.
That's right. And why do I bring this up to you? Because, heck, I'm doing this for over 40 years. And I got to tell you, since 1999, when the euro came in, the Maastricht Treaty prohibited governments from going beyond certain levels. That's why Europe is in the mess they are. They have no fiscal flexibility to deficit spend.
For those that don't understand what Mr. Flanagan is saying here, is unlike here in the U.S., where we can, by executive order or by Congress, we can increase deficits, we can spend what we need to and when we need to, outside of extraordinary measures that they made during COVID. That isn't the case in Euro. They signed this treaty that all of those countries have to abide by. And that's why we've been, in our current administration, has been saying you need to spend on your own defense, right? And Germany said, you know what, we do. That's what I'll take away there is, I've been a little negative on the administration because I just think that we've seen, everybody is so spooked right now and just on pins and needles waiting for the next announcements. That is one that moved the market. I'm sick of it. I'm sick of kicking the can down the street against Canada or Mexico, personally.
That's right. And this is earth-shattering news because we talked about how so much money has moved into the U.S. because why would you sit in Europe?
Yeah.
The fact that they announced this in Germany, the core of...
Right. And could you explain that a little bit? How important is Germany when it comes to the EU?
Let's go back. A little history lesson quick, though. When East and West Germany united, it was upon the West German back that they created an exchange rate to what was called the Ostmark, which was the East German currency. And I think it was 10 to 1, which was unbelievable. So the expense of absorbing East Germany was on the West Germans. Now bring it forward to the euro. Germany has been bailing out. Let's take it. Greece. They have been bailing out all these poorly growing countries for the last 10 years. Again, it falls on the back. And we've gotten to a situation where Germany just announced their factory orders were minus 7% in January. The Eurozone's GDP in the fourth quarter, 0.2. So Europe has come to a complete flat line of no growth. The fact that Germany is proposing this is earth-shattering, and money has moved out of the U.S. into European space, and that is behind the computer-driven deluge of sell orders in the high-tech space in the U.S. because money has quickly shifted. This happens in milliseconds as a new data point goes into the weightings of these trillion-dollar models that automatically trade in the marketplace. So I just wanted to, give my 2 cents to our audience to try to explain and put a reason behind what has really gone on in the marketplace and how earth-shattering this news has been to the investing world.
Right. And you and I have talked about where, Japan was a place that we thought would move first. And quite frankly, it's been the opposite, right? We've seen, all of this news across the globe has hurt them more than it's hurt Europe. It's moved their markets down to lows since, again, they've given up all their election gains the same way we've seen in the US.
And the core behind this move by Germany is clearly within Europe. You have a very large wake-up sound going on. The election in France won. Now the election in Germany has shifted the populace. The populist movement has doubled their gains in Germany. And so let's call it the status quo politicians within Europe are waking up to the fact that the populist movement is growing very strong. And probably if a next election was held, you could see the prevailing powers in the political space within Europe be, taken out. So the fact that Europe is doing this is very big. I won't elaborate much more, but secondarily, you now have on the back of that, the Bank of England's Monetary Policy Committee, a member, Catherine Mann, came out late yesterday saying that a gradual interest move no longer sends a clear message to the volatile financial markets, and that larger shifts are now needed to cut through the noise. Wow. This is like, honestly, I am amazed at the fact that first Europe, now the UK, are suddenly rapidly coming to the table and saying we need to get out in front, as you alluded to. We need to get out in front of this market.
Yeah, I think that that they're realizing that they have to stand on their own 2 feet, that, they were already in a bad, precarious situation, not just versus the king dollar, but versus the rest of the developed nations, right? And that if they didn't make a move, they were going to be the bottom, and we saw it. If you look at the stocks, I mean, they were sucking down here for, a decent amount of time. They couldn't move, for all of 2024. So, it's good to see that. While you were gone, I put a bottom line here on DXY about 103.40 that I thought, was that next support level. Did I do okay there?
You did great. I brought it in at 103.35 today. So that you were bang on to that level. I look at right now, we're trading around, 103.65?
103.74.
Okay, so we're still moving up. So we're holding that very well. I look at a break here of 104.40, which will reignite the upside. So just to finish up my thought there, this move, the shift in funds has probably concluded, or at least the dramatic episode is over. And that's hence, look at the charts, the sharpness of the moves in all the markets.
Yeah.
Now that it's over, And now that we've got some major news out of the UK and Europe, and this, to our audience here, this is probably one of the largest positives that you could put into this marketplace. I'll add one additional one. If we can see some sort of budget done by our legislative branches of government, you have probably a concoction that is so incredibly bullish for the world's growth. So tariffs aside, as we see tariffs is a lot of talk. And a fair trading system, you're beginning to see everybody come out and say, you know what, okay, maybe we need to be a little bit fairer. Look at the way U.S. and Mexico have quickly come, and look at the Mexican peso immediately getting that surge of support and gaining against the dollar. But this is a great concoction in the bigger picture. We've been talking about April, May. I'm going to push it out May, June. That's when this is all going to take off. Right. And that's when King Dollar will probably come back into play. Until then, it's probably more of a sideways move. What we need to see from the U.S. is a budget agreement. So if you have any specifics on currencies, I'm watching the euro dollar as the best gains that the euro dollar has seen since 2009.
Yeah, I put that across the board. Yeah. That was the first thing I saw this morning and thought of you right away, you know?
Yep. So I think right now you're looking at the euro 107.75. If we get back below that, then this initial surge in money moving quickly is probably come to fruition. And I would look for the dollar to begin to trade back up, because after all, what Europe is proposing is not going to happen overnight. It still has to go. It's got to get voted on, and everybody's going to have 2 cents to expand. And in the broader, bigger macro picture, hey, increasing debt is not the best way to be going in this environment today. So, but
I do think, though, that they need to build industry. Again, it's sort of like, I was a big proponent of the CHIPS Act, even under the last administration. I do think we need to onboard that technology here into the U.S. It's very important. Yep. I think for Europe to spend in defense is very important for them, because we need to step away a little bit. And I do think that we're going to see that move happen, and not just under this administration. I think that you hear a clamoring across, social media and things that, we shouldn't be, all of it, especially when numbers come out and you say, hey, we do X percentage of NATO is us, and X percentage of the UN and money is us, and X percentage of that. Those changes are underway, and hopefully they continue, and they're good for our market. I thought, did you listen to Treasury Secretary Bessent at all? And, I thought he put a good line in there that sort of said what you're saying too, is, businesses have lived sort of on the teat of the government recently, since, especially since COVID, right? There's been a lot of stimulus into the markets and into, the pocketbooks and things like that. And it's time for these private markets to operate with private money, with private investment. And, that's why what's been really great, again, from the administration we've seen so far, is when TSM says, I'm going to spend X billions in the U.S. and SoftBank says, I'm going to invest X billions in the U.S. That's what we want to see. I don't want to see the U.S. government saying I need to spend X billions to do it.
Correct. And I'm sure that that's a lot of the impetus behind the Eurozone and the UK at saying, wait a second, all this money going into the U.S. to develop is a net positive. And of course it is. It's a unbelievable net positive. And I did listen to the Treasury Secretary. In particular, what I found very important was his commitment to policies that lead to a strong dollar.
Yep.
Because back to Bob Rubin's days of the strong dollar policy, the U.S. inflation cratered because a strong dollar actually works against higher inflation.
Right. Once we get there and stabilize, right. It's the volatility that's hurting everything right now, quite honestly, in my personal opinion there. I don't have the experience you do on it, but that's what the markets are right now. And it's where it's bringing consumer sentiment down because people, most traders are perma bulls when it comes to retail traders. And on days where they get in and they think they're in a trade, they're not being quick enough to get out of those trades. And the market is turning quickly on people.
And that's not going away.
Right. And that's what we're both saying. That's why I'm bringing it up again is, I've said it every morning this week while I've been here is, again, be quick to take those trades. That's why for me, for you, the DXY, for me, I'm watching literally the 1 minute chart on QQQ, keeping an eye just on VWAP. I don't need a bunch of stuff here, but what I want to see is just that general direction. Although I want to make sure that it fits my screen.
That's right.
And it's given us market direction here. I don't need a whole bunch of, 800 things on there. This is going to give me my momentum for the day. It showed us yesterday almost to the T. We went up to the north a little bit. We got a little bit of nice move up here. And then as soon as, again, Lutnick's news wasn't as good as people thought. This was on the expectation the trade tariffs were ending. Tariffs not ending. We're kicking it down the street. What happens? Boom, right back down. And then we work our way back up. It's just volatility. If you're scalping these moves, you're making a lot of money. You're happy, hopefully, if you're doing it right. But as I pointed out is, how I would be trading it through there and on breaks and then trailing stops from there to make sure that once I have a profit, that I'm keeping a profit, right? I'm sure you guys in the electronic world of currency, that was always a big thing, right? Once it moved into profit, we're never letting it go out of profit.
Exactly. And so what do we have for the viewers? You need very good risk management.
Yeah.
And that means if you go into something and it's wrong, the price doesn't lie.
Get out.
If the price doesn't, just get out and don't lose the thought. Maybe you just had the wrong timing and the wrong level. I mean, nobody picks bottoms and nobody picks tops.
We talk about that all the time, right? Only liars say they sold the top and bought the bottom because only one person can do it, and it's usually an electronic algorithm.
That's correct. And so just have a very disciplined approach to your risk management style. Next week, we have China's CPI on Sunday night or Monday morning in Asia. Let's see. Let me just be my foreign exchange trader. That's going to be a lower number. And what's that going to do? It's going to stoke fears of a deflationary environment within China. And that's probably not going to be decent. And then I believe we have U.S. CPIs and other inflationary.
Yeah, they're both in Wednesday and Thursday will be the fireworks again. So now, I wanted to ask you, we didn't talk about China at all. A bunch of more stimulus is there. I talked about him yesterday on the show. Has a lot of the Chinese names moving up again. So you think, you'd be getting neutral on those here towards the end of the day if you're looking at those, or do you think what they announce over the weekend gives them another bump? Because it does look like they're trying to go on the offensive. Not in the way that Germany is, but in a similar state of saying, Mr. President, if you want a trade war, we'll give you a trade war.
Okay, so it's a controlled market environment there. So understand that. If you're investing there, understand it's very controlled. And so what you see isn't necessarily what you're going to get. So I have a very strong theory in my trading, and that's take what the market gives you. If you happen to get long and you've got a gorgeous gain into the end of the week, you take it. Maybe you don't take all of it off. If you have $1 on, maybe you take 75 cents off and just leave the smaller position into next week. But you're going to have a difficult time fighting data if their CPI is in the negative category and indicating deflation. Well, one only needs to look a little bit north to Japan to see the 20 plus years of fighting a deflationary environment, and their stock market did not go up during that fight.
No, like we talked about for sure. Well, that great data there, great information, and it is. I've noticed Fed Watch has moved up now. It's about 65 basis points on the year. What are your thoughts here on our Federal Reserve and what they should be doing with interest rates here over the next few months?
Well, I would like to say if I had Powell right in front of me right now, I'd turn to him and say, "Come on, do your job, cut rates." I mean, what do we want to look at in that employment? It was a little bit softer, but there's a number that I always watch called the U6, which is the all-encompassing employment number. And that number was up from 7.5% to 8%. Don't need to tell me that the labor market is strong. The labor market is beginning to show weakness. And Fed, that's one of your mandates, so get on it. Economic growth is beginning to teeter here, and the world is cutting. ECB just cut rates to 2.5%. You have room. Cut. Show some support to the marketplace and cut 0.25%, especially that now we hear Bank of England starting to talk about maybe greater cuts. So we have a little bit of time, not next week. Next week we have Bank of Canada. I would expect them at 3%, maybe to cut 0.25%, just to give a little bit more to their economy. But certainly the following week is where the Fed steps in, Bank of Japan steps in, and the Fed should be looking at the data. They say they're data dependent. Well, guess what? You saw a 0.5% increase.
Yep, absolutely. So let's hope that that's the case for that. Thank you so much. Like always, Mr. Flanagan, we will see you early Monday morning. I'm going to take us out with our Quasar video here.
And to tools, scattered data, and outdated systems. It's time for a better way. This is Quasar Markets, an award-winning platform that doesn't just support traders. It empowers them to do their best work. With Quasar Markets, we've brought together over 1,000 tools into a single, seamless experience. It's all here in one place. When it comes to data, we knew we had to get it right. That's why we've integrated insights from the most trusted sources: Edgar, Fred, NASDAQ, the World Bank, and other leading financial institutions, along with real-time updates on sports, trends, weather, and news. But we didn't stop there. We wanted to empower every trader to learn, grow, and succeed. That's why Quasar Markets gives you access to leading educators and strategies powered by advanced AI. At the heart of it all is AI. It analyzes millions of data points, identifies trends, and delivers actionable insights. What makes Quasar Markets truly revolutionary is how it adapts to you. With customizable tools and flexible options, it works the way you do. We've built this platform with one goal: to help you make better, faster decisions without the noise. This is the future of financial research. It's simple, it's powerful, and it's built for you.